much inheritance should I leave my children and grandchildren? Wikipedia defines inheritance as the practice of passing on private property titles, debits, entitlements, privileges, rights, and obligations upon the death of an individual. Whether you are planning to leave something sentimental or something like a sum of money behind for your loved ones, you'll want to invest the time to listen to this tutorial. There are many ways to leave an inheritance for your loved ones. You can use the straightforward percentage rule and leave a set amount of your assets for each child or grandchild. You may also decide to leave your worldly assets to a beneficiary only if they are living a responsible life. The other ways will be unique to your situation. Either way, you'll need to document it legally in a will or trust that is recognized by the state that you claim residency in at the time of your death. You're watching Budget Wrench, the channel that helps you upgrade your budget and puts that extra cash back in your pocket. Money crosses all generations, so it is our goal to provide content that will benefit all ages. Stay tuned until the end of this video where you will find information on how to adjust your current budget and put hundreds of dollars back in your pocket. Here are a few definitions to keep in mind while I go through this video about inheritance. Will. A will is legal documentation that is used to communicate your last wishes. And if you write it yourself using legal forms online, such as mamabear.com or legalzoom.com, you can save hundreds of dollars. Also, a big part of maximizing what you leave behind is minimizing taxes. Federal taxes on gifts and estates can be among the highest assessed of any financial transaction. In addition, some states levy their own estate or inheritance taxes. If you have a significant amount of money in your estate, it would be wise to hire an estate planner and attorney to discuss your goal. Beneficiary. The person designated to receive the income or assets of an estate. Executor. This personal representative is responsible for locating and overseeing all the assets upon someone's death. Those assets may include retirement accounts, bank accounts, stocks and bonds, real estate, jewelry, and any other items of value. From the estate, the executor also has to pay off any and all debt owed by the deceased. The executor is also responsible for filing the final personal income tax returns on behalf of the deceased for the year that they died. Trust. Avoids probate. Property left through a living trust does not pass through probate. Property left through a will does go through probate. Probate is the court system designed to wrap up a person's affairs after their deaths. Probate takes a long time, can be very expensive, and for most estates isn't necessary. Because all property passing through a living trust does not have to go through probate, it can be distributed to beneficiaries right after the death of the loved one without any fees. Now that you've heard the basics, let's get into some examples. Scenario number 1. Your Aunt Lily suddenly passes away, and though she is married, she has no children. She has a $100,000 life insurance policy, and her $250,000 home is paid off. She also has everything spelled out in her will that, upon her passing, she would like to provide her niece and nephew $10,000 to help pay for their post-high school education. Because her husband is listed as the beneficiary on the life insurance policy, he must agree to the inheritance for them to get any money. He will also be listed as the sole owner of their home. Also, because she had a will and not a trust, the probate process must be followed before any money can exchange hands. This could take from 12 to 18 months, leaving her niece and nephew wondering why it takes so long. In addition, for the niece and nephew to qualify for the inheritance, they must show proof of educational expenses post-high school. Scenario number 2. Grandma passed away at the ripe old age of 95. She was preceded in death by her husband of 70 years. Since she only had assets of $26,000 and a pearl necklace from her late husband, her grandson, the executor of the estate, worked with a legal online website to update her will. It was her wish to give all 5 grandchildren 10% of her assets to each grandchild and give the pearl necklace to her only daughter. The other 50% of the money would go to her church. The online revision of the will was only a fraction of the cost of an attorney. Bottom line, there are an infinite number of scenarios that a will or trust can take. And though legally no one is guaranteed an inheritance, the process always goes better if the intentions of the deceased are documented and signed by the grantor and executor. If you enjoyed this video, hit the subscribe button and give us a thumbs up. And stay tuned to this channel and our other videos for tips about making the most with your current budget. Let me know in the comments section how much time and money you've saved by using these tips, or if you have any other ideas for saving cash you'd like to see. And as always, keep upgrading your budget and your money.